so good to see you in here. After so long time speaking through the Teams, we couldn't believe that a couple of months ago, when we were thinking and organizing this event, that we'll have this attendance. We were concerned with the COVID. It was one of the fears that we were considering. Nevertheless, when we thought was realizing this event, that was António Gil, we were sure that this event was COVID-free, because COVID wouldn't be allowed to come here by free by António Gil, and COVID wouldn't pay to attend. So we are all COVID-free. Welcome. Let's start our presentation. I have the responsibility to provide you a picture of where we are right now. And after that, my brilliant colleagues and professionals that led to brilliant companies, Francisco and Eric, will talk about the present. Please, what I just said is only valid until tomorrow. And should not and cannot be used in a pitch against us, Savills. Many thanks. So let's start with the present, that I'm responsible to provide the mentioned picture. What we have right now, we all know, because we know Mandarin, that this is the way that is written in Chinese crisis. So it represents danger and opportunity. Well, in fact, this is the perspective that it was chosen by me. When we Google it, there are lots of wordings and lots of characters that represent. I choose this one in particular because when we look to the danger, it's very easy to recognize, it's very simple. When we look to opportunities, wow, it's so complicated. We need to look in details for where they are. And this is your role and our role to assist you on identifying the opportunities. So, when we look to the investment in Europe, and it will stand the same to Portugal. Thank you. When we look to the investment in Europe, we all know, most of you are investors. When there is a crisis, you get away. So this is what happened in Europe in particular, and in Portugal it's not different. When we look to the investment outlook in the last months, we noticed that since 2009 there was a significant decrease. Nevertheless, we project that 2021 will be the fourth best year ever on investment in real estate in Portugal. This is quite important to underline because the market is recovering from quarter to quarter. We already have 41% of investment in offices since the beginning of the year in 2021. Retail, obviously, is suffering. Everyone is more focused in buying supermarkets, in buying high street retails, not interested in the rest of the areas on the retail. Besides this, industrial is becoming a fashion. Everyone wants to invest in industrial logistics. There is a significant opportunity. And logistics, hospitality, and alternative are the segments that most of you asked us to identify opportunities. On the offices, we expect this year to end up at a level of 120,000 square meters. Which is an underperformance comparing with what happened a couple of years ago. In 2019, we reached, and 2018, we were close to 200,000 square meters in terms of take-up of offices. And it's not difficult to understand what happened with the offices during this year. Every time that we were on the way to go back to the offices, we were sent back home. So we noticed that every time that people were returning to the office, there was a significant increase on the requests to identified offices. There is a latent demand for offices that is looking to find a more stable environment in order to change offices. I can tell you that by the example of our company, up to a couple of weeks ago, we were in an office on which we occupied 700 square meters. We just moved to an office that occupies 1,300 square meters. Why is this happened? Well, basically, because in the meantime, during the COVID, we grow 20%. We grow from more or less than 80 to close to 100%. Besides this impact, which doesn't justify the increase on the office, there is a need to have more space to accommodate the team in a new reality. And this new reality demands space for our employees to collaborate, to potentiate their activities. We need a better space because it's not enough after sending people back home, just tell them, come back to the office. We need to create features in the office that are attractive for people to feel motivated to come to the office. This is a challenge that we are facing nowadays in this new trend. Sorry, let's go back just to underline that what is quite important when we look to the performance of the offices is to underline that although we have a significant reduction on the take-up, this reduction on the take-up wasn't assisted by a reduction at the level of the prices. So it's very important to keep in mind that in certain areas of the city, the prime rents that were achieved in the last months were above the prime rents that were in practice in 2019 before the COVID situation. This underlines the optimism with which we are facing the new times for the offices market. And the concern that we had 2 years ago is going to be increased, I would say, within 1 year and 2 years. Because we will notice that there are no offices with quality to satisfy the level of demand that will identified or is already identified. Regarding the Portugal offices investment volume, this second half of the year will assist to a significant investment that is considerably higher than the one that we assisted on the first half. And your presence in this room led us to be very optimistic and probably will overall this amount of investment that is expected. Industrial and logistics, this is one of the sectors that benefit from the crisis that we had. The performance of this sector was amazing. It's incredible the level of take-ups that we've been assisting in the last months, and this is supposed to keep until the end of the year, and will assist to the same performance during next year. Although the level of investment in industrial logistics is not the same. And here, basically, because there are no good opportunities for the investors that are looking for dimension, for assets with quality to be offered to themselves. This is an opportunity that we have on the market, and for sure that new products are on the way to be constructed and will be offered in the market. Retail, well, we all know that it was one of the sectors that suffered significantly with the crisis that we faced. As I mentioned, the demand for retail reduced significantly. The investment on retail reduced significantly as well. The number of opening shops, new shops downtown in Avenida da Liberdade, for instance, and in Rua Augusta, was just 21 shops that compare with more than 100 shops that opened 2 years ago. So we will assist to a new restart, and as it was said by the CEO of Fonibal Rodemco, there is no space for boring retail, so this is a challenge that we have in this market. And to finish, the driving force, residential, obviously. We were all sent back home. We were prevented to stay in the office. That impacted on the take-up of offices. We need food. We need a better chain of distribution that justified the increase on logistics. So knowing that we were sent back home, obviously that the residential market had a very good performance during the last years. The last months, it will keep until at least the end of the year. It's quite curious because when we look, one of the concerns that we had with the residential was regarding the top of the market, because people were concerned because the volume of the sales was not the same as previously. Keep in mind the following. What was the concern? Well, the concern is because in the past, in a recent past, when we had a luxury residential project, we sold it on plan 40–50% of the project. And suddenly, those sales dropped to 10–15%, and it took more time to sell these projects. This is the matter of concern that we assisted in the residential without assisting to an accommodation on prices to reduce these timings. So this is a problem on which, for sure, the subsector of the real estate can live with it and will solve it. And there are other segments that will become very active in the market that are not as central, not as luxury, medium product, and product that has to do with other alternative segments. So this is the picture that I have to show you. And now I will deliver the presentation to Eric van Leeuwen. Thank you very much.
Thank you, Paolo. Thank you for leaving about 2.5 minutes each for Francisco and myself to talk about the future and what the alternative sectors are. It's a pleasure. I will underline what Paolo says. It's a real pleasure to be here and to see you all in the flesh, as they say. So Paolo has talked about let's say the status quo, the situation as it is at the moment. It's very much business as usual with differences per sector. But what is also a feature of the market is that the product is very scarce. And therefore, the market is looking at alternative sectors to allocate funds, while also a lot of the new sectors that you as investors are focusing on now also take very much into account the changing demographics, which I'll come on to. The graph, this graph shows what is already happening in Europe. So this is the allocation per sector, and if you look, you can see that in 2016, the lower bar is investment in offices and then retail, and you'll see that in 2016, office and retail allocations were 65% of total investment volumes in Europe, and that was down that is down in 2021 year to date to 45%. Conversely, logistics and residential, Paolo's mentioned it, are very much flavor of the month. Only 25% allocations together in 2016. This year to date, 46%. So in fact, today, in 2021, there's more money is allocated to logistics and residential than to offices and retail. Logistics is, I would say, an established asset class, but I will talk about some of the others, and residential is clearly one which is very much flavor of the month in Europe. In Portugal, we are having a little bit of an issue with that because there is no stock, there is no opportunity at the moment to look at, to consider buying residential. The multi-family asset class is very much emerging in Portugal. There's been, as most of you will know, there's been really very little institutional investment into the residential market since, I would say, the 1960s, well before I came here. But because of legislative constraints, it was really not an asset class that institutions would easily invest in. Today, of course, that's all very different. There is no conversation in the Cushman & Wakefield office with investors which not also refers to residential, to build to rent, or if you want, the purposefully designed residential development, which is owned and operated by a single entity. We're not talking granular residential, but entire buildings of scale. This is the investor interest, of course, is very much driven by occupier interest. We see that there's an enormous scarcity of rental accommodation, particularly in the big cities, in Lisbon and Porto. The drivers of demand are very much the increased mobility of the workforce and, let's say, the generation Z, which isn't really so keen on buying residential. They would prefer to rent. So we see the same themes in Portugal emerging as they are in other parts of Europe, but it's still early days and we don't actually have a proper first project yet. If you look at Cbre, which is another venture of António Gil Machado, which is and Ricardo Guimarães, which is the residential property database, That shows that in Lisbon, for instance, in 2020, take-up of rented accommodation was up by 34% in Lisbon, 8% in Porto. But although these percentages are quite impressive, the actual number of contracts is very, very low. I mean, in Lisbon, that represented 3,000 rental contracts. So very small market still. Rents are increasing, of course, as a result of little stock. In Lisbon, again, according to C, 29% last year. In Porto, no less than 47%. But again, this is on a relatively small basis. The supply is increasing, and it's helped by a number of factors. One is that a lot of the short stay accommodation is being converted into longer stay accommodation as a result of tourism being so much down last year. There are a number of central government and local government initiatives, and also the PRR, the program, the bazooka, as we call it in Portugal, has clearly in its plan to assist in building affordable housing for the rental market in a number of locations. But importantly, the private developers, the entrepreneurs like you, are clearly have recognized the opportunity in the market and are preparing to build to rent accommodation, but it's not there yet. Yields, you can, of course, it's a little bit academic because in the absence of any deals, it's more difficult to talk about yields. But again, CIE refers about 4% in Lisbon and 5% in Porto, and that seems about sensible in the current market conditions. The other sector which I'm going to talk about, my section, by the way, is beds. You may have gathered that Francisco and I divided the alternatives, and beds was my specialty. Student housing is very much an area of focus as well. This is more developed already. There's more development. There's also been a number of institutional transactions already. It's driven very much by the number of students versus the number of purpose-built student accommodation, which is very low again. Portugal has about 400,000 university students this year, and it's growing 3 to 4% every year. And 40% of those students live away from home, so do not have the option of staying with mom and dad. And also 15%, so about 60,000 students, are actually of foreign origin. So they come specifically to Portugal to study, be it on an Erasmus program or something else. And they are, of course, very clearly the target population for purpose-built student accommodation. The total stock, again, is relatively low, but there's clearly more development taking place. We reckon about 22,000 beds at the moment in 230 units. Most of all of this is in Lisbon and Porto in more or less equal proportions at the moment. Rents, again, not so easy to average, but we believe it's of the order of 660 euros per month in Lisbon and about 580 in Porto. The investment rationale is relatively simple. It's clearly a growth area. It's undersupplied. It is becoming more institutional. There have been already as I said, some transactions. There's also the opportunity for doing larger transactions because the developers tend to build more than one unit, and so you have the opportunity of scale. Last but not least, in terms of demographic makeup, it's last. The senior housing is another area of focus for many investors and developers. It's again, it's a bit like BTR. It's much less developed still. A lot of focus from developers to create product at the moment, but there's not a lot available yet. It's almost a no-brainer, I think, this asset class, because if you look at the demographic makeup of the Portuguese population at the moment, the so-called dependency ratio, which is the people who are aged over 65 versus the people who are productive, if you want, so between 15 and 64, that ratio at the moment is 34%. So you have one non-productive person for 2 productive persons, if you want to put it bluntly. And it's expected to increase by 2050 to 63%. So almost 2 people who are not productive to 1 person who is productive. So there's clearly, it's a population which is clearly aging and for whom there is not a lot of alternatives in terms of accommodation. The total stock at the moment is about 100,000 beds, but much of that is very granular, in very small units, privately run usually, but generally not of a very high quality. So there's a real opportunity here for building purpose-built and senior residences of some scale. Again, there is... as I said, there's a lot of investor interest as well, and again, there is very little product at the moment still, although, as I said, that will change. The pipeline that we know of is still relatively small. It's about 1,000 beds, which is, let's say, confirmed under development. But there's clearly a lot of interest, particularly from operators out of France, Belgium, the US, and I hope that when I get to the age that I need senior residents, they will be built. They will have been built. It's clearly on the investors' radar in international terms. I mean, in the first half of this year, about 4 billion euros was invested in senior housing and in healthcare, and that was 41% more than in the previous year. So clearly this is very much on the agenda as well. And again, there will be opportunities because most developers prefer to operate rather than own. And so whilst they find it difficult today to only operate, they will need to develop in order to create the product. Clearly, they will be looking for investors to take this off their hands. Francisco.
So, thank you, Eric and Paulo, for once again leaving me with no time to speak. I guess that's what they call competition. Secondly, thank you, Roger, for calling me a dog. Not even my wife calls me a dog. It's great to be back to the old normal. It's great to be back to seeing real faces, real people. I am so back into the old normal that I'm using paper and I'm even wearing a tie. So, even my friend Ricardo. So, talking about getting out of the box and what are investors doing in new sectors. So, healthcare is clearly an area that we see of growth. You may see that investment volumes were 135 million in 2020, and we are forecasting an increase of nearly 50% for this year to then 200 million euros. There's a lot of good quality stock in this market. As you know, most of the stock is owned by the healthcare operators. 53% of hospitals are in the private sector, but only 34% of beds, so there's clearly room to grow. And there's a number of US and European players entering the market, whether that's specialist investors or even general investors with dedicated vehicles to healthcare. These are assets which are critical to their operators, so it's an asset that will most likely remain occupied for a long period of time. Then data centers. Dominic touched already in this type of assets. It's no secret that oil or data is the new oil. And the need for data, warehousing and processing is rapidly increasing. IoT, artificial intelligence, automation, cloud computing, new internet applications and social media will definitely ensure a continued reliance upon exponential amounts of data and processing power. Also, GDPR obliges to have data centers in regions. In Portugal, there's not a lot of infrastructures for the moment. There's one data center in Covilhã, but only with a capacity of 8 megawatts. And the market is clearly preparing for growth. And the best example is the Sines 4.0 hyperscaler data center, known as Star Campus. It's a partnership between Pioneer Point Partners and Davidson Kempner. and it foresees 5 data centers, each of 90 megawatts, so a total capacity of 450 megawatts, which is a relevant size considering that this year the forecasted take-up of space is between 370 megawatts, around that, for the flap markets. So that would be Frankfurt, London, Amsterdam, and Paris. Sorry, not yet. Not yet. Thank you. That would be an easy one. So why invest in data centers in Portugal? Portugal is a critical geographic and unique location between Europe, Africa, and the Americas, which is leveraged by the subsea cables. You may know 2 of them. Link is a very well-known cable, which is up and running this year already, that will connect Sines in Europe to Latin America. And it's a state-of-the-art optical platform offering secure, high-capacity connectivity on a unique and low-latency, diverse transatlantic route, so linking the major terrestrial and subsea hubs in Europe and Latin America. Also, the Equiano cable that you might have heard of, linking Portugal in Sintra to South Africa, which is fully funded by Google. So there's stable and high investment yields in data centers, and by the way, that means 5.5% to 6%. So we're talking about 200 or 250 basis points above prime yields generally in most markets. And there's low-priced energy from renewable sources, particularly in the Sines project. So moving on to a new area, agribusiness. This is an area where, well, we all know that food production will need to grow by 60 to 70% to feed the global population by 2050, and that will mean feeding 9 billion people. The Portuguese market was boosted by the construction of Alqueva, the Alqueva Dam. For those of you who don't know where Alqueva is, that's in Alentejo, offering new irrigated land. It operates since 2012, and it brought an additional 120,000 hectares of irrigated land, and currently is being extended to more 170,000 hectares due to be completed in 2024. So the region offers very good conditions for namely almonds and olive productions. There's a strong inflow of North American and Spanish investors into the Portuguese market, and over 10,000 hectares of irrigated land for agribusiness development were transacted between 2018 and 2020. However, in 2021, transaction deals have already exceeded 12,000 hectares. So almond and olive, as I mentioned, are the preferred crops. Alqueva and the Idanha region, because they are irrigated, include 90% of the land area transacted. The Algarve is not yet a very important area due to the low number of hectares. Again, not the right button. Sorry for that. So why investing in agribusiness? So there's very good quality product, and especially the calendar in Portugal. Farmers have the capacity to produce earlier than North America or Central Europe. So in this way, not only allows the extension of harvests period, but also the possibility to get higher prices for their products during the pre-season. There's availability of irrigated land, again, in Alqueva, and the cost of the land is still low compared to other markets. Let's see if I press the right one. So, yes, you guys, investors in the room, are getting out of the box. So we went from square meters to beds to megawatts, now to hectares. So who knows? The next thing will probably be cubic square meters of oxygen in the moon. So not wanting to bother you with all these key takeaways that we have here on this slide. I would just highlight a few, that the investor appetite remains very, very strong, that there is lack of product, and there are forward funding and forward purchase deals being done because of that. And there is yield compression also because of that. And I would highlight two very important items here, which is the Portuguese market needs more, faster licensing. I guess you all know that. And we do need more agile and more entrepreneurial financing. So if we can sort those two issues, Portugal will be an even better place for investment. Thank you very much.